Hi, I'm Shannon Spotswood, and I'm joined today by Rick Wedell, Chief Investment Officer at RFG Advisory. We just wrapped a webinar for our clients titled Crisis in the Ukraine, What It Might Mean for Your Portfolio. Rick, you did a phenomenal job. Thank you
so much. I appreciate that.
I thought it would be helpful to just do a quick summary of the high points. The first is touch on what's going on with regards to the headlines.
Yeah, absolutely. So, as you'd expect, this is a very dramatic event, and it's not anything that we want to minimize in any stretch of the imagination. There's obviously a lot of fighting that's going on. There are people that are being killed. There's property that's being destroyed, and there's a country that's getting overrun. And that is a very dramatic. And as you'd expect, there's a lot of sort of dramatic headlines in the financial press. The impact is kind of mirrored, right? Things are very dramatic in the financial press. There's a lot of, it's a very volatile market that gives CNBC and Fox Business and a bunch of those folks a lot to talk about. The word crisis appearing on the screen frequently and a lot of different things to report on. The reality is that those individuals are all paid based on advertising. And when you're paid based on advertising, you get paid when people watch. And so you'd rather be more dramatic than less.
Are you surprised by the heightened level of volatility?
It's a classic fear response. There's uncertainty out there, right? Like we don't know exactly how this is going to get resolved. And when you don't know, it's human nature to expect the worst. Most of us do. And so that leads in some sort of, buy the rumor, sell the news type behavior, right? The lead up, the not knowing is worse than the actual event, which is what I would remind folks. When the shooting started, the market actually rallied for 2 days. It's one of these things where the volatility doesn't surprise me, and nor does the sort of network response to it, which is let's get out there and play up the volatility and talk about, exactly what's going on in an event to kind of, I hate to say it, but an event to kind of frighten people into watching the programs more frequently.
One thing that seems to have surprised to some degree the market is the swiftness and the strength of the sanctions that are being applied to Russia. Can you just elaborate a little bit on that?
Yeah, I think it's very interesting. I think people underestimated the political will that exists to punish, Russia in this case. The Europeans are dependent on Russia for oil and natural gas. There's a very easy calculus to say that the Europeans would just say, well, I may not like what Russia's doing, but if I want to keep the lights on, I've got to keep buying their oil and natural gas. So there's not much I can do about it. That's a very simplistic way to think about the situation. The reality is that the populace of Europe is very green. They don't care about fossil fuels to begin with. In fact, if it was up to them, there wouldn't be any. And so as a result, and all of them remember, whether it's stories from grandparents or whatever else, they remember the last time that a dictator started invading countries in Europe. And so the political will to punish Russia has just been remarkable. And you're seeing a stronger sanction response, a stronger political response than I think anyone anticipated prior to the conflict starting.
What are the implications from that? I know it's impossible to predict in full, but the implications for China, because that certainly is also a factor that's playing into the background.
I think anybody that thought that, maybe Russia was just going to be able to win a massive coup here and the rest of the world was just going to sort of roll over and play dead while Russia, started to reassemble the USSR, or at least the pieces of it that haven't joined NATO. I think the concern that we would just roll over has gone away. I think that China is probably a little, they're definitely playing their cards close to the vest. They have their own assets that they'd like to take back, or at least disputed assets, Taiwan, South China Seas, et cetera, where they would like to take back territory and might like to do it militarily. And I think they're watching all of this play out. The fact of the matter is that the length to which the rest of the world has been willing to go to sort of isolate and exclude Russia from the global financial system has to be giving China a little bit of a pause because it's certainly a stronger response than I think anybody saw coming.
This is a great time for a public service announcement around money behaviors. So when fear is dominating the headlines, we obviously have been fielding phone calls from clients around, should I think about market timing? Should I think about downshifting my risk in my portfolio? Just talk about like, what are the, money is very emotional, some of the worst emotional reactions to a time like this.
I think it's always worth reminding people, if you live in a strategic asset allocation, which most of you do, right? You have, 60% of the portfolio in stocks and 40% in bonds or some other magical number mix that adds up to 100. Then the reason why you own bonds is specifically for times like this. And I know right now seems like, oh my God, this has never happened before, but crises happen all the time. They come in different flavors, but whether it's North Korea and the nuclear crisis, whether it's Iran and the nuclear sort of proliferation crisis, whether it's
the COVID volatility of 2020,
whatever volatility you want to point to, these things happen, and they happen with shocking regularity if you actually go back and think about it. And so as a result, this is the reason why you own the bonds in the portfolio that you do. This is the reason why we have fixed income assets. It's the reason why we have safe assets. And now is not the time to go monkeying around with it. Now is certainly not the time to think about becoming, should I be massively more risky or massively more conservative? No, don't let the news headlines of the day dictate your portfolio allocation because over time it has been demonstrated that is a losing strategy. You're more likely to get it wrong than you are to get it right.
I think that's a perfect summary for what a taste of what we covered. If you'd like to see the full recording, please check out our On 24 replay or visit our YouTube channel, and be sure to tune in to all of Rick's upcoming market commentary. Thanks so much, Rick.
Thank you, Shannon.
Thank you for tuning in. And if you're enjoying this content, please subscribe to our YouTube channel and click the bell to be notified when we post more.